So we're gonna go slow. Okay. So last class, I start saying this, and I'm gonna start the same way today. And you're gonna listen to me saying a lot of times almost the same thing. What I want you to take away today from this class is very important. I'm not saying that you're not allowed to talk to your clients about mortgage loans, but it's not really your job to educate clients about mortgage loan. That's my job. Okay? So you probably won't be able to answer all the questions because it's too much. I'm still learning. I learn every day, especially now with the COVID. The guidelines change every single day. Okay? This is just information to help you to understand the market, the system. But don't feel bad if you cannot answer, especially for new agents, if you cannot answer your clients' questions, if you cannot answer all of them. That is not really your job. Okay, it's like me trying to answer questions related to real estate, or how they can look for a house, or what system can they use, or how can they send an offer. I mean, I can't. I understand a little bit because of the mortgage loan, you know, because I bought my own home. But again, do you remember what I said last time? How every single mortgage loan is? Who was here last class? What I said about every single mortgage loan is like a fingerprint. Okay? So every single person is different, and that's very, very important to you guys understand. So before to go in that information, I want to tell you something very, very roughly. How do we qualify a person for a mortgage loan? Our system, the way our system is set up, it's automatic. I just have to enter the financial situation for that client. What I mean is I can enter how much the income, the monthly income is. I will verify that with either pay stubs, tax returns, W-2s, or 1099s. Okay? I will verify that with those documentation. I'm gonna say how much that monthly income is. Excuse me, before that, I'm gonna pull up credit. I'm gonna see credit score and credit report, okay? The credit report will show me the liabilities that client has. That part, I cannot change it. We just pull up the credit report. We cannot change it. We cannot do anything. It is what it is, okay? So what I can do is I can go over those liabilities and say, okay, if you are co-signing or the client is co-signing an auto loan, for example, but that auto loan is my son's and he's paying from his bank account. And I can prove that my son is paying that auto loan with 12 months of bank statements from my son's account showing that monthly payment is coming from somebody else's account. So I can exclude that liability, okay? So my system, the way my system or our system is set up, I can exclude the liability, or I can mark that liability as a paid off. Meaning the client or the borrower will need to pay that credit card off either right now if it's necessary, or we can pay it at closing. Meaning the client has to come with more money to the closing to the title company be able to send that credit card payment. Are we good?
I have a question.
Yes.
What if, in this scenario, which is something that I'm actually working with right now, the people co-sign for the son to get, you know, a house, whatever, they're on their son's mortgage, but the son is writing a check every month to the parents and not the mortgage company, would that still be the same? If they were basically paying a certain sum to the parents every month, you know, would that?
Okay, so the son is paying to the parents and parents are paying
I'm
the,
just saying if that was the case, would,
no,
okay, it's
that
not
is
actually
not
due
the
to the
case.
financial
Correct.
lender that gave the loan.
correct, that's
Okay.
not the case.
Okay.
That happened to me actually when I bought my home. I co-signed an auto loan for my son and he was transferring the money from his account to my account. We couldn't exclude that liability because I was doing the payment, the monthly payment for that auto loan from my account. So it was showing like it's my responsibility. I was paying that auto loan, so we couldn't exclude that, that liability from my mortgage loan. Now, something that we can use too is if it's a business owner and they are paying the auto loan from the business account, we can exclude it if they do have 12 months of bank statement as a proof. Okay, so we cannot change the credit report. Just to have you an idea, don't take this like black and white, not literally, but to have you an idea. What we use to qualify or pre-qualify or pre-approve a person for a mortgage loan based on income is basically 50% of the monthly income, okay? So if a person monthly income is, I don't know, $5,000, okay? I can only use 2,500, okay? So I'm gonna use 2,500 and this is monthly, okay? This will be minus all the monthly payments for either auto loan, credit cards, student loans, even if they are deferred. If they are deferred, we have to add a 1% of monthly payment for every month because eventually they have to pay back, okay? If you get confused, don't worry. I just want you to have an idea because sometimes people say, oh, but my monthly income, my salary is $5,000. I cannot use 100% of that monthly income. I can only use the max is 50%. Yes.
Is the 5,000 after taxes?
Depends.
Oh, okay.
Okay, good question, good question. You see why this class has to be probably 2 or 3, but that's a very good question. Okay, what happened is, if the person got paid or got a W-2 to for the end of the year to pay taxes, we are going before taxes, gross income, okay? If the person is self-employed or has their own or business owner, we are going with the net. The reason why is because that money can change every year. So I have had some cases, unfortunately, and this is something that just happened to me. I had this guy, business owner, very good company, very good income, almost $400,000 a year in gross. Guess how much was the net? $18,000.
Oh my goodness, wow.
Yes,
Did he have a lot of losses?
yes.
Okay.
So they can
Or at least on
claim
paper.
payroll, I
The
mean,
paper.
yes,
That's what you wanted.
everything,
Yeah.
everything.
Probably made money on the side, probably had it under his mattress.
Yeah, but unfortunately,
Can't
if
do
there are
that.
not, if that money is not showing in taxes, we
Can't do
cannot
that.
do anything. We do have a solution for that. We do have a program, but it's more expensive. Down payment, it's a lot higher than a qualified mortgage. So we're gonna talk about that probably in another class, okay? Because it's,
I have to leave at 12:30, but I do have a question that probably everybody might be interested in. With the COVID and everything, if you had a person that had a pretty good work history, up until COVID, are they still gonna be able to get a loan if they, start up with a new job?
Yes.
Is there something with COVID that's helping people that want to
Okay,
get a home?
that's a good question, and we have, especially now with COVID, and thank you for mentioning the COVID. Okay, okay, this is something we have to be very careful, because to qualify for a mortgage loan, we need to verify 2 years of work history. That doesn't mean that necessarily the person has to be working in the same company for the 2 years. I have had some clients that they are been in 5 different companies for the 2 years. As long as they do have a stable job, probably in the same line of business, or they are moving because they are getting more money. Because you're not moving from a job if you're gonna get less money. I mean, that doesn't make any sense. And that's something I want you to think about it. I am your partner. I'm on your side. And if this class is gonna be recorded, I'm hoping my underwriter is not gonna see it.
Can I add something to that? So I've always been on that same mindset, because someone told me that before, but something that I ran into recently with my business partner. She had a client that transferred jobs, still the same type of job, still a painter. So we're like, oh, it's still good, lots of continued history. But his new employer was his family member, his son.
Mm-hmm.
And in that case, you have to be employed by your family member at least 1 year, no
Yes.
matter the history of
Yes, that one you have to be very careful, because, and this is what I was going to say. Thank you, Ramon. This is for the underwriter. Every single mortgage loan has to make sense. Okay. For example, I cannot say that I'm going to buy a second home a block away from my primary home. I mean, nobody is going on vacation a block away from home. Yes or not? I mean, not me. So if I'm buying a second or vacation home, have to make sense. I mean, same thing with employment. If you are employing your son, your daughter, a family member, you have to have a year history of that employment, because that's a red flag for underwriter. We're trying to commit a fraud. That's how they see it, unfortunately. And I always say to my borrowers, listen, I'm on your side. I need to close your deal because I need to put food on my table. But unfortunately, the underwriter doesn't trust me, doesn't trust you. If I say Ramon has blue eyes, they are gonna ask me for a picture of his eyes showing he has a blue eyes. That's how it is. Okay, so you have to keep that in mind. I'm on your side. I want to close every single deal. But we have to prove everything to the underwriter. I can work a couple of things on my system. I can play around with numbers. I can say, okay, what if this person, besides the 5,000 monthly income, has $500 for overtime every month? What if this person can pay off this credit card? What if I can exclude this liability? What if I do have a co-borrower or a co-signer? What if that's for pre-approval? I do not, as a loan officer, we do not approve a mortgage loan. That's the underwriter, okay? But after I play with my numbers, I have, if that is the case, if I submit that file saying the client is gonna pay off this credit card, we can exclude this liability. The borrower has 3 months of reserve for closing costs or for for the closing. We need to prove that to the underwriter. Okay, it's not just what I'm saying. We have to prove it. Okay, so let's go back a little bit. Hopefully, did I answer all the questions? You had a question, I'm sorry.
Well, it was way back at the 400,000 and the
Okay.
$18,000. And
Oh, thank
so
you.
was he not reporting at all? Is that what was happening, or?
I mean, they can write off everything. So they are not doing anything illegal. I'm not saying that. But unfortunately, when you go to your CPA, you have, and that's something I ask all my borrowers. If you are self-employed or you are a business owner, let your CPA know you are planning to buy a home. So the CPA, I am not going to advise anybody related to taxes. I always ask them to go to the CPA and talk to them. Okay? So what you guys have to take away to you from this class? Okay. Okay, so income. So I can only use 2,500 for this person. What if this person pays an auto loan for 500 every month? Not 2, but 5. How much do I have now?
2,000.
What if this person pay a credit card, let's say $150 monthly payment, the minimum payment? We go by minimum payment, okay? No, oh, I always pay more than the minimum. I don't care. We go by minimum payment every month. So what if this person has another credit card for 180? What if this person have another card for 120? What if this person has another credit card for 100? What if this person has a child support for 350? What if this person has, you see this? This is what happened with people making a lot of money and having a lot of liabilities. And unfortunately, this happened to us every single day. When we interview the borrower, the first time they never have any debt. Isn't it amazing? Okay, so please always keep this in mind. It's very, very important to you understand my job and my position as a loan officer. And I really want that from you guys. Because I know sometimes agents got upset with us because we cannot pre-qualify a person. And I mean, there are some things that unfortunately I cannot change. Once I go over all this, I call the client and I said, listen, do you have money to pay off some of this credit card? Is somebody else paying this auto loan? It's this auto loan monthly payment coming from somebody else's account. Can we prove it? Do we have 12 months of, I do have a couple waiting until November the 1st because they co-signed for an auto loan for their son. And the 12 months is gonna be on November 1st. So we're waiting for that period to go with the pre-qualification. And I know if we can exclude that liability, they will qualify for the amount they are looking for. Because this doesn't mean that I can definitely not qualify a person. This means probably I can pre-qualify them for less amount that they are looking for. Make sense? Any question? Okay, so nobody remembers what are you guys supposed to take away from this class today?
Mortgage is like a fingerprint.
There you go, and what else?
Elba's the expert.
There you go, I love it. I love that part better than the other one, I just kidding.
You are a good teacher.
Oh, thank you. Right, probably I'm in the wrong career, don't you think so? Okay, so let's talk a little bit, and again, if you want to go over more details about all this, please feel free to stop by my office, okay? Or give me a call, or we can have lunch. We can have a happy hour. I don't drink, but I can drive. I'll be your designated driver. I volunteer. Okay, so let's go over a little bit about, and now we're gonna use this paper right here. Let's go over a little bit about the different or the most common type of loans we normally deal with, okay? Who knows something? Please don't read. Who can tell me something about FHA? How do you guys know? Hey, don't read, I'm watching.
Just in general about FHA?
Yeah, whatever you know about FHA.
Well, whenever I think of FHA, have to make sure that the buyer has 3.5%,
Okay,
which sometimes we can ask the seller for it.
okay.
No, okay,
You get 3.5%
Maybe not.
payment?
right. Or maybe not for the 3.5%.
It's okay, don't worry.
It's
don't
for
worry.
the closing cost then maybe.
Don't worry, remember, who is the expertise here?
Yeah.
Yeah! So don't worry, guys, I'm not gonna judge you. I'm here to help you, okay? So, but that's a very good point, thank you. And actually, I didn't have it here, so thank you very much.
And then you have to make sure that the roof is in good standing, because that's gonna be inspected.
Okay.
Inspections are different.
Let's seller concessions or seller credit, okay? Roof, what else?
Termite,
Okay. What else?
Credit score,
Credit score, thank you, and this is FHA. Okay.
580. Usually between 5 and
Let's,
6.
okay, don't let me forget to tell you something about that 580 point.
Okay.
Okay, okay, what else?
appliances, they have to have, so
Working
you
appliances.
can't have a home that doesn't have a stove, that won't have that.
Okay, what else? Anything,
Oh.
anything that you can think about.
The paint has to be
The
in good
paint.
condition.
That's a good one.
Other
Okay.
safety, windows,
Windows,
doorways, for wood.
Smoke detectors.
okay.
The electrical box.
What if I don't smoke? No, just kidding. Go ahead.
The electrical box has to be up to code.
Yes,
Probably.
okay, okay. You know what I love about you guys? You're doing your job. I love it. You know why? Because all this is on your side. I love it because you guys are doing your job. You're not doing mine. And I love that because I'm not pretending to do your job. Okay? So that's great. Thank you very much. So let's start. And the last page, you're gonna have a glossary. It's, I select some terms, and for all those Zoom people, I'm gonna send you this by email, okay? That doesn't mean next time you cannot come to my class. Actually, next time you have to come to my class. Okay. So what FHA stands for?
Federal Housing Authority.
Thank you. First time home buyer. Who is a first time home buyer?
Haven't owned a principal resident in 3 years.
Perfect. This is very important because if you bought a house and you want to buy another one and use another FHA, if you sell the house with the FHA, you can have another FHA, but you cannot have an FHA, two FHAs at the same time. You can have up to 10 conventional loans at the same time, but not an FHA. Yes? Okay. So we're not going through all this because it's gonna take too much time. So you have it for your information because, it's kind of like, do you understand some terms? Because eventually when you're gonna sending me your clients, you're gonna hear from my processor, myself, or my assistant, and you will see a lot of these terms. There are a lot of others, but we're gonna talk about it in the next class. I love it. I'm thinking about next class. You see, I'm in the wrong career. Okay.
Do you do VA loans too?
We do.
Oh, okay,
Yes.
I didn't see it.
And that is something that I want to, we're having another class, September 21st. We're gonna talk about reverse mortgage. We do have an expertise in our office. He's the only one who takes care of the reverse mortgages. So he will be here that day, okay? I'm not gonna be your teacher that day, but then you let me know who is the best, okay? I'm gonna have a survey ready for you guys. Okay, so FHA. I'm gonna try to go very simple because through FHA, because you're gonna have all this material you can go over. Again, you can stop by my office if you have more questions. Sometimes people got confused about what an FHA mortgage loan is. Most of the time, and I heard this a lot. Oh, that's a government loan. It's not a government loan. It's a loan insured by the government. And that is basically the big difference between FHA and conventional loan. Okay, let me, where is it? Here. Okay, so we're gonna talk now about FHA. So FHA loan, it's insured by the government. Okay, meaning if a person is buying a home with an FHA loan, they have to pay a mortgage insurance. And that will be through the government. Lucas, do you have a question? I'm sorry. No? Okay, okay. Let me know if you have any question, okay? Okay, so it's insured by government. You pay the mortgage insurance and it's by the government. It's not a government loan. Now, we do have what we call a DPA, and I don't think I add that term in your glossary, so please, if you can add it. DPA, down payment assistance, okay? Down payment assistance, it's a second loan. You can borrow your down payment from government. It's normally $7,500. We're gonna have another class only for DPAs because I know most of the people know about the 7,500. There are another 3 different DPAs. And for me, the 7,500 is the worst. Okay, so, okay, but that's another class because it's too much information. Okay, it's insured by the government. Minimum down payment, Ramon, how much?
3.5.
3.5%. 3.5%. So I love Ramon talk about this because 3.5% down payment. That money has to come from the borrower. The seller cannot help with down payment. However, a family member can gift the down payment, not the 100%, not the 3.5%, but at least 70 up to 80% is acceptable. Okay?
80%
Of the 3.5.
Okay.
Okay? Kind of like 80% is acceptable. I mean, you're not buying a home and somebody else is giving you everything. Do you remember why I told you? Has to make sense. Okay. So the down payment can be gifted. Okay. Seller concessions, seller credit. There you go. That's the one Ramon was talking about. Can be up to 6% of the sales price. Do you understand the difference between, and if you don't, let me know to go over. Do you understand the difference between sales price and loan amount? Everybody? Lucas? Okay, okay, great. Okay, seller concession up to, and be careful, okay, up to 6%, meaning the seller doesn't have to help the buyer with that 6%. Can be 1%, can be 2, can be 3, can be 4, can be nothing. That it's really up to you, and you know that, right? Okay. Credit score. Credit score, yes, before COVID. Okay, credit score, minimum credit score 580. I'm not gonna lie to you, I haven't seen after COVID, FHA pre-approved for 580 credit score, unfortunately. Nor,
620.
What's that mean?
uh, 548, 600 maybe, but the government, let's say it that way, can ask for 10% down payment. Mhm. So try to never discuss those terms with your clients. It's just for your knowledge, so you understand what is going on. When I call you and say, hey, I'm sorry, but your client has less than 600 points on credit score. So you kind of like understand, what I'm talking about, because it's hard, especially now. In the past, before COVID, I had a couple of clients going with 580 points of credit score, but DU, and you have DU, it's the desktop underwriter for Fannie Mae, and it's basically the system we use to pre-approve a borrower, okay? So they ask for 10% down payment, okay? So going with FHA doesn't mean the borrower, that's the minimum, and that's something I want you, when you talk to your clients, say minimum down payment is 3.5. That means the Fannie Mae can ask for more, okay?
Right.
Could be, and that's
can.
something, how can we know how much down payment Fannie Mae is gonna ask? Again, I play around with the system. To pre-approve a borrower, basically, I need the DU give me an approved / eligible. That's what I'm looking for. You probably will see A/E. I didn't add that, but well, you can add all those extra terms in your list. So AE means approved eligible. That's what I'm looking for to pre-approve a person. If I got approved ineligible, we're in trouble. If I got proceed with caution, we are in big trouble. So what I do, I start changing. Do you remember how I can play with my numbers? Okay, what if this person paid this credit card? What if we can exclude this liability? What if this person makes more money? What if we have a cosigner? What if we have a co-borrower? What if the person has 3 months reserve? What if the person can get $20,000 gift and the person can go with a higher down payment? So I play around with the system, I run DU again, and boom, until I got the approved eligible. If I don't get it anyway, I'm gonna call you, I'm gonna say, I'm sorry, please don't get upset. Okay. Okay. Again, right now, the best credit score for FHA right now with COVID is 660.
660.
Yeah,
Mhm.
it's easier to get a borrower approved for an FHA. Okay, so.
Is that still with the 3.5 down, or is that with
Yes,
10%
that's
down?
with the 3.5 down. Yes, yes. Okay. Again, the borrower employment history has to be 2 years history. Be careful with that, because if your client says to you, okay, I used to work for this company and I was getting a W-2, but a year ago, 6 months ago, I decided to open my own business and I decided to go self-employed. Guess what? We have to wait 2 years. 2 years of tax returns for self-employed or business owners.
Yeah.
Because that income is not stable. So we need to verify 2 years no matter what. People with 2 jobs. Okay. Let's say a person has a full-time and a part-time job. The part-time has to be for 2 years. If it's a year and a half, we cannot consider that as a second income. That's a red flag because again, the mortgage, the whole mortgage itself have to make sense. So it can be like, oh, so the person just got a job to qualify for the mortgage. And unfortunately, that's the way they see it. So the person has to have the 2 years for both jobs. Okay? Okay.
Elba,
Yes, ma'am.
I'm sorry to interrupt again,
No, it's
because I
okay.
am actively, and I'm gonna hook you up with the girl. She's a server, so with COVID, her one place kind of let her off. So there's a break in work history. So if she gets, back into things and her credit score is good, she gets another job. How long will she have to be at this new job before she can be considered for FHL?
30 days.
30
We
days?
would
Okay.
actually, excuse me, no, a little bit more than 30 days because we will need to verify 30 days of pay stubs.
Okay,
Okay? As long as we can verify the 30 days with pay stubs, she
Mhm.
will be fine.
okay.
Let's say before COVID, and that's a good question. Before COVID, if you had health issues or something in the family, blah, 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 FHA allows you up to 6 months of gap in work history. Okay, but you have to have a very good reason. It's not just because I didn't want to work. Hey, hello.
That was embarrassing. I'm surprised you didn't show it off.
It's okay. So, there are a lot of, that's why, again, who is the expertise here? Because it will be hard for you to explain everything to your client or my borrower. It's too much, and again, every single mortgage is like
Fingerprint.
a fingerprint. There you go. Okay, so ba-da-da-da-da. Okay, FHA, you can only buy a primary home. You cannot buy a vacation or second home, and you cannot buy an investment home. Okay. Appraisal, we have to have an appraisal. DTI or debt to income ratios, you have that term on your list. DTI or debt to income ratio has to be the front end, which is the monthly payment, PITI. You know what PITI stands for?
Principal, interest, taxes, and insurance.
You are the best. I love her. There you go. Principal, interest, taxes, and insurance. Don't forget, if the house is in a flood zone, the borrower will need a flood insurance. If the house is in an association, they will need to pay the homeowner association, and we're gonna include this in consideration in the qualification. Okay, so basically, front end ratio is this, and back end ratio, the max for FHA is 43%. It's this minus all the liabilities. Okay, so just the monthly payment cannot be more than 31%, and the monthly payment minus all the liabilities cannot be more than 43%. And this is a secret between you and me. That's what Fannie Mae says. I say something different. No, not me. But every bank has their own guidelines. They can take risk. We can take our own risk based on every person's financial situation. So again, every single mortgage is like a fingerprint. That's why we need to review the whole situation. We need to see the whole picture.
But you're not gonna service the loan, you're gonna sell it, right?
Yes, but that's the point. If we do not have a very strong loan, we probably won't be able to sell it. And that's why, okay? So that's why we can take our own risk based on that financial situation. Let's say the person has a very good credit score, the person has enough money to go with the 3.5% down payment and who knows, 3 months of reserve, 6 months of reserve, but the ratios are a little bit higher, let's say 45, 46, we can still pre-qualify and approve that mortgage loan because the person has reserves, which is good. Let's say the person has been in the same job for 20 years, very good credit. Yeah, too much liabilities, the ratios go 48, 49, but everything else it seems to be good, we can still approve that mortgage loan. Everybody understands the process of selling the mortgage loan? Any question about it, Lucas?
No, fresh out of school, I got it.
Do you understand what that means? Or?
Yeah, they
Okay.
distribute it through third parties.
Okay, perfect, great, okay. Any other question? Okay. Okay, foreclosures and bankruptcies. For people with bankruptcy history, we have to wait 2 years. And be careful, 2 years after the discharge of that bankruptcy. Okay, that doesn't mean the first day that people file their bankruptcy. No, it's since the discharge. Same thing for foreclosures. And for foreclosure for FHA is 3 years. Okay? Okay, so we talked about FHA. Any question about FHA? Something that I didn't, this roof, termite, blah, 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 blah. This is right. You guys have to watch for all this when you are a client pre-approved for an FHA. And this is because FHA, they are very, very, very extremely picky because the government is insurance that mortgage loan. So if something happened, basically the government is taking that house and they need to be able to sell that house in the future. So they are very special with appraisal. So I know you understand that part, but again, this is your side of the process. I cannot deal with this. I don't know how the house, all the houses look amazing in pictures, right? And that's all I can see, the pictures in the website. Okay, any other question regarding FHA? Something that I didn't talk about it. Everybody's good? Good, I'm good too. Okay. Okay, let's talk a little bit about conventional loans. Let's see if I can. Okay, you took notes, right? Okay. All right, conventional loans. What you guys know about conventional?
20% down.
20% down. What else?
Could be as low as 5%,
Okay.
3%.
Okay. You
Wow.
said that. Oh, nice. Okay. You said 20%, 5%,
1%.
3%.
We're not doing bidding wars here, okay? This is not an auction.
Okay, what else?
That can be used for almost any type of purchase.
Yes.
Right.
Great. That's good. Okay, what else?
More flexibility.
What else? What else you guys know? Can I dance? Okay. Conventional loans. Conventional mortgage loans, we do have two different groups of mortgage loans. Okay? Those are qualified mortgage, and I'm sure you have seen this before. Qualified mortgage and non-qualified mortgage. Have you seen this before? No? Okay, so we have two different groups of conventional loans. Qualified mortgage and non-qualified mortgage. What qualified mortgage means? That means those mortgage are regulated by Fannie Mae and Freddie Mac guidelines. We have to go by Fannie Mae and Freddie Mac guidelines. You have a description of what Fannie Mae and Freddie Mac is. Again, every bank take their own risk. So every single mortgage loan is a, there you go. Okay. Non-qualified mortgage means they are out of the guidelines of Fannie Mae and Freddie Mac. Okay? And this probably will be another, oh my God, we're gonna have class every day here. So, what can be a non-qualified mortgage? Can be bank statements mortgage. Have you heard about it? Bank statements. Bank statements mortgage is a program we can use. Do you remember that guy having gross income almost 400,000 and okay. So we can use that program to help that guy to buy that house. We are not going to review taxes. We don't care about taxes. We don't see taxes. We are going to see last 12 months of bank statements, business, personal bank statements, or if the CPA can make a profit and loss, we're going with the profit and loss. Now, down payment is higher, interest rate is higher, everything, closing costs, everything is gonna be higher than a qualified mortgage conventional loan, okay? And definitely we are going to have another class about it, okay? We also have jumbo loans. Yeah. Jumbo loans is a non-qualified mortgage. We do have I-team programs. I don't know how many of you are familiar with the I-team. I-team, it's a number, and I always forgot what is I-team. It's
What does that stand for?
oh, hold on, let me.
Does that have to do with-
I always forget.
Does that have to do with the
International, it's
international-
the international.
taxpayer
tax-
identification number?
Yes.
There you go. You're
Yeah.
the best. That's the one.
I have one.
This is for people who, because, oh, something I didn't say is for for any FHA or qualified conventional mortgage loan, the person has to have a legal status in United States, either green card, US citizen, or DACA. Cannot go FHA, people with DACA. Do you know what the DACA, the DREAM Act? Okay, for students, okay, can go with conventional, cannot go with FHA. DACA asylum, people with asylum from all around the world can go with conventional. But this, I think, is for those people who don't have any legal status in United States. Okay, so they can open a business, they can work, they can do everything, and this is gonna replace, let's say it that way, the social security number. They can pay taxes, they can open credit cards, they can buy a home, they can buy a car, they can do everything, okay? So this program is a non-qualified mortgage. Same thing, down payment is higher, interest rates are higher, everything is closing costs, everything is gonna be higher than a qualified mortgage loan. Okay, let's go over because we are late. Mortgage, conventional loans. So minimum down payment can be 3%, absolutely, with home ready and home possible. Only for first-time home buyers, okay? Home ready and home possible. You can have a non-occupying borrower, but they have to go with 5% down payment. And probably we will need to have another class for home ready and home possible. We'll see.
What was the 5%?
I'm sorry. Okay. If you have a person with a non-occupying borrower,
Okay.
you can go home ready as a first-time home buyer. So let's say I'm a first-time home buyer, but I cannot qualify for that mortgage loan, and my mom wants to help me. But my mom already has her primary home. So I can buy with conventional loan home ready, but because I'm the first time home buyer, but I have to go with 5% down payment, not with 3% down payment. Okay? Other than that, can be 5%, can be 10%, can be 15% and 20%. Something that I didn't mention, I'm sorry about that, I apologize. FHA, mortgage insurance, the borrower will pay the mortgage insurance for the whole life of the mortgage. That never ends, that never goes away for the 30 years. If the borrower keeps that mortgage and lives in the house for 30 years, they are gonna pay the mortgage insurance for 30 years. Conventional loan, if they are buying with 3, 5, 10, or 15, any other than 20%, they have to pay mortgage insurance. But once they paid the 20%, the borrower has to call the bank and say, hey, I already paid you 20%. I want you remove my PMI, private mortgage insurance. If, you know, who is gonna be like tracking how much you have paid, not me. But once you pay 22%, guess what? Automatically disappear. That's another difference between conventional and FHA. Conventional loan is insured by a private insurance company. It's not by government. That's another big difference. That's why sometimes it's more flexible, sometimes it doesn't. Because DTI or debt to income ratios is lower than the FHA. Okay? Credit score, 620 the minimum for a conventional. Credit score is 620 the minimum for conventional loan. What else? Conventional loan can be 15 years, 20 years, or 30 years. Neither one of them, either FHA or conventional, has prepayment penalties. Meaning the borrower can pay if the borrower is, yes, please.
Is that 620 with COVID?
No.
No.
Always 620. Now, actually, I will say for any mortgage loan, the best, I don't know if this is the right way to say it, but the best or the minimum credit score will be 660, will be optimal. So yeah, 660. But this is before or after, it's 620. Yeah, thank you for the question. So neither one of those have prepayment penalties. The borrower can pay the mortgage loan in anytime. They are, I mean, if they close today and tomorrow they won the lottery, guess what? They can go and pay their mortgage. They are not gonna have any penalty.
Can you do that on FHA also?
I'm sorry?
Is FHA?
Yes, same thing. They do not have any penalties. Any question regarding conventional loans? Home ready, the advantage of home ready is everything with home ready will be cheaper. The interest rate, the mortgage insurance, the coverage will be 20%. For regular conventional, it's 35%. So it will be lower than a regular conventional loan. If they can go home ready, they have to take a class for first-time home buyers. We will need to see the certificate for everybody in that mortgage. Okay? Yeah, we can have a non-occupying borrower or co-signer. We can have up to 4 borrowers and co-borrowers. We can have spouses, we can have sisters, mother, daughters, sons, whoever is older than 18 years old, adult, basically. Anything else we need? They are more flexible with the appraisal. You don't have to, you as an agent, no, you don't have to be that, careful about any stuff in the house. Obviously, you want to take care of your client and you want your client to get the best for their houses. But if they can get something repaired, conventionals are more flexible on appraisals. Something that I want to mention is because some realtors got confused about the inspection. We as lenders do not require the inspection. We do not. We don't need it. That's for you and protect your client. Sometimes I will ask you to send me the report because to submit the file to processing, once you send me, I will send you the pre-approval letter. You will go out shopping with your client. The client find the house of their dreams. You're gonna send the offer. Once you got the offer accepted by seller, that's a contract, right? You are gonna send me that contract to me. I'm gonna put everything in place. Be sure I do have all the documentation, everything. I can prove everything I said in that application to be able to submit the file to processing. So to submit that file to processing and disclose that file, I will need a homeowner insurance code just to submit the file. So I will probably request a couple of different codes from a couple of different agents. And sometimes they are not gonna give me discounts for that code. Okay, so I will need the inspection for the insurance agent, not for the loan. Okay, is that clear? Okay, so we as a lender do not require the inspection. We don't need it. We just requested to help the client with the mortgage insurance.
It can screw up a deal though, because if a roof has like, say,
Yeah,
3
absolutely.
shingles.
But believe it or not, well, you know, because I have had some clients that they refuse the inspection, but that's really up to them. That's something. But we as a lender, we don't require an inspection. The required definitely is the appraisal, which is completely different. The the borrower is gonna pay for it. It's $515. They have to pay it in advance. If not, we're not gonna send the appraisal. But yeah, that's something that some agents got confused about it, that, oh, the mortgage loan, we do not require an inspection, okay? Definitely you have to recommend it to your client to protect them, but not for the mortgage loan. Anything else other than that? And definitely we need to get together more often. Other than that, we do have VA, USDA. Are you guys familiar with USDA?
Yeah, it's not
We don't
gonna
have a
happen
lot of
here.
it here.
No,
Some, but
it's
not
not because of the areas. Yes,
Yeah.
Arcadia,
Yeah.
Ellington,
Yeah.
Parrish, all that. Yeah, not anymore. Not this. Not even used to be part of NACO. Yes, but not anymore. But I mean, sometimes if you have clients want to live there, you can do it. We can do it. VA, USDA, non-qualified mortgage. We have a lot of different programs. So when you interview your clients, I don't know what questions you asked. Never say, oh no, we cannot, call me, please. Call me, because we might have a solution for your client, okay? So related to the mortgage loan, let me do that part of the job. I want to help you with that, okay? Any question? Yes.
I kind of like the idea of getting you talking to my client. Either here, maybe, or at their house. Are you able to do that?
I would prefer not to do that for security reasons.
The house?
Yes,
But in here would be okay.
absolutely.
You can be your bodyguard there, Kat.
There you go.
And let me tell you, even I can see clients on the weekends. I normally schedule the appointments in my office, and I always talk to the client before over the phone. are with me, my husband. So, yeah, I can see clients Saturday and Sundays. I don't know if I allow to come in this office over the weekend, but definitely in my main office in Sarasota, I am. So I normally see clients because, if they work the whole day after, I can see clients after 6 if they need it. That's not a problem with me. You just please let me know in advance because I can put it in my schedule. Um, but yeah, definitely I would love because that way if they do have any question, any concern, I can answer that question. I can explain them. They can see, I cannot show you any of my application for security reasons. I'm not allowed to share because that's personal information. But if I do have the client in front of me and you are in the meeting, I can ask the client, is it okay if I discuss this in front of your realtor? If they say yes, absolutely. I can explain everything. They can see numbers. They can see my system. They can see the credit report. They can see what I can change and what I cannot. And it will be a lot easier for all of us. Yeah? And absolutely, absolutely. You can always contact me, even on weekends. I mean, I'm not going to answer the phone after 9 p.m. but, um, but yeah, you can call me, you can text me. I do have two phones, a personal one and a business one. I can see my emails, my text messages. I do have WhatsApp, and you can call me anytime to my business number. It's the one on my business card. You have my email, you have my phone number, you have my fax number. The fax is coming to my email. We do not have any more those machines, sending paper. No, that comes directly to my email. So it's more secure as well. My phone is protected. My computer is protected by the bank. This is my business computer. I do have my personal computer separate. So you are in good hands. Bank of England is doing everything we can to protect you, protect me, and protect our clients. Yes,
I just like the fact that you have all that information, like if I'm trying to guess, well, not guess, but.
Well,
like,
kind
I'm pretty
of.
sure it's like this, and then next thing you know, I've got them off course and they're, making promises that I can't keep and things like that. I'd rather do something.
I just,
Yes,
I'm not
yes.
a mortgage lender, please.
Yes, no,
Here's
and if
their
they
card, here's their
cannot
number.
meet me in person, I can always talk to them, over the phone. I can always call them, or if they, because sometimes people, and it's funny because sometimes people, oh no, don't share my phone number, and then they call me and I do have their phone number because they are calling me.
Yeah.
Isn't it funny?
Well, it's a bad thing for us to be showing people a lot of houses and then find out that they don't qualify, or maybe it's only half as much as they need.
Yeah,
The whole thing
absolutely.
falls apart. And it's
And
a lot of
something
waste
you
of time.
guys have to keep in mind. I would recommend to your borrower the best mortgage loan for them. I got paid. I don't care what kind of mortgage loan they are going with. I don't care the interest rate. I don't get more payment just because they're got higher interest rate or any kind of loan. No, I got paid as long as I close that deal with you. I got paid. So sometimes people don't want to tell me how much money they have because they think I'm gonna charge more, or they no, that's not true. That's not legal. I'm not gonna do anything illegal. But definitely, I will let you know. I will let you know, hey, this is the best mortgage loan for your client for this, and this reason. If we go with this one, they're gonna pay more. They're gonna have this, or whatever the case is. I'm gonna tell you as much as I can based on client's privacy. Okay, I'm not gonna discuss with you credit report or credit history or credit score, but the mortgage itself, I can definitely share with you. Hey, I pre-approve your client for 300,000, but we cannot go higher than 250 a month for taxes. We cannot be in a flood zone. We cannot be in association. We cannot go more than $150 a month for homeowner insurance, kind of things. Yeah. So always my job is to calculate those numbers the highest possible because we don't want surprises at the end of the deal, right? So, and this is something I always explain the borrower. Even the first disclosures, what it's, named the good faith loan estimate, you will see a very high numbers. Don't get scared about it. At that point, we don't know what homeowner insurance policy we're going with. Most of the time we know the taxes because we can go into the county website and figure it out how much the taxes are, but we don't know a lot of things. So those numbers, we don't know what title company fees are, the one you're using. We don't know basically anything. So those numbers, and you will see that complaint, you will hear that complaint all the time. Oh, these closing costs. Just keep calm. Those numbers are going to change because, we need to, as soon as you send me that contract, I need to start working on that file because we want to close that deal in 30 days. Hopefully we can close sooner, but I need to start working on that file. I cannot wait for the client to select that homeowner insurance. I cannot wait for a flood zone insurance. You know what I mean? So first numbers are always higher than what they're really gonna be. So always, please feel free to call me and ask me any question. If I don't know the answer, I'm gonna ask whoever knows, and I'm gonna answer you. Okay? I do have my processor. You can always call the processor. Always. If you have a question related with processing process, you can always call the processor.
Underwriters don't talk to anybody.
Underwriters, no.
Yeah.
They don't, not even with me.
Yeah. Oh, okay, right.
Who's
So
the
you don't do
processor?
new construction, right?
I'm sorry?
No new construction with Bank of England?
We do have a construction to perm loans, but in this area, we only have one builder, and it's Whitestone Developments, and it's not Naples, it's not Cape Coral, Fort Myers.
Oh,
And they build from Naples to Port Charlotte.
what is that? Just one building?
It's just one builder, Whitestone Developments, I think it is the name.
White?
That's White
Never heard.
Whitestone Development.
Stone?
Yeah. Yeah, that's the only. I think the other one I know it's in Tampa, and you know what? I don't know if they built in this area. I should call and ask. But and the other one is in a city that I don't even know where is it. I know it's in Florida, but I never heard that city before, so I really don't know.
So who's the processor? It's not like it was just one person.
The processor is basically the person who helped me to be sure the file is on place to send it over to the underwriter.
Okay, what's her name?
We do have a different,
have a lot.
yes, we do have different processors. I think I do have right now working with me 4 of them, 4 or 5. Yes, 4 or 5. So I do have 2 of them who speak Spanish. So if that is the case, and even if you don't speak Spanish, feel free to work with that people. I'll be there to help you. Okay? And I know you speak Spanish and you speak Spanish, so me encanta.
I just know the bad words.
But yeah, and I
That's
do.
usually the first words you learn.
So I do have 2 processors who speak Spanish, and then I have 3 of them who, they don't speak Spanish. But yeah, I have 5 processors. I don't know how many underwriters. I know we do have 2 who speak Spanish as well, but they never talk to anybody but the processor and managers. They never talk to me. But basically, the processor are second, part of eyes, watching the file and say, oh, Elba, I don't think we should send these documents because it's too much. Between the processor and myself, we want to be sure we're not sending more to the underwriter than what they really need.
Yeah.
Or we're not
Less is
sending
more.
less.
Yeah.
Because if we send less, we're gonna delay the process. If we're sending more, they're gonna ask more questions, and we're giving them tools to deny
Less is
the
more
file.
sometimes.
Because that's their job, and that's how I describe the underwriter. their job is to deny that mortgage. That's their job, basically. So yeah, but I always, you will always hear that from me. I do have a great team working with me. My managers are amazing. My team, they are amazing.
How long have you been with Bank of England?
With Bank of England, a year and a half. I was before with Cross Country Mortgage. Before that, I was with Bank of America. Before Bank of America, I was with a small bank in Miami area, Biscayne Bank and Intercredit Bank. And before that, I was with Bank Central in Nicaragua. So I've been in banking.
That's where you're from?
Yes.
Oh, okay.
Yes. So I've been in banking for too long, 25 years
You must
already.
love it. You know that.
I love it, and I love this side of the job. I love it. I love to help people. I mean, yeah, I do. And I love to teach classes. Okay, so let's see who can help me with people through Zoom, because I want them participate in the raffle too. I mean, who can?
I gotta get out of here, but thank you. It was
Okay,
wonderful.
give me 5 minutes.
Oh, okay.
Okay, so first question. Ta-da-da-da. Let's see. What do you guys have to take away from this class?
Elba
Oh
knows
my God.
No doubt about that.
Okay, so pick one just because you're the first. Okay, so let's see my second question because I forgot. Okay, how many loans did we talk about today? Oh, be careful with that answer.
Two, technically.
Are you sure?
I think right now.
How many mortgage loans? Think about it. Think about it. Anybody on Zoom? I don't see the chat.
They have to, you have to tell them to unmute themselves to
Oh.
answer.
Anybody on Zoom knows how many loans we talk about today? You have to unmute yourself, guys. No? Oh,
Four.
so we start to start.
I say four.
We have to start over.
Three. I think three.
I say four.
3.
Right.
Yeah. FHA, conventional is qualified mortgage and non-qualified mortgage.
Yes.
And that I picked that question because you have to be very careful. Home ready and home possible are conventional mortgage loans. Bank statements, jumbo ITIN are non-qualified mortgage, and
Right.
FHA is FHA.
Right.
Yeah. So we talk about 3 mortgage loans today. Yeah. Okay.
Close my eyes.
Oh, so sorry. I'm sorry. Okay. Who remember where am I from originally?
Nicaragua.
There you go. Oh my God, thank you so very much, guys. Thank you for your time.
Thank you.
Oh, my
I'm
pleasure.
glad you had Dunkin' Donuts in there because I boycotted Starbucks.
Starbucks.
Oh,
They're not
okay.
behind law enforcement.
Oh, I'm sorry.
Starbucks,
There is lunch for everybody in the kitchen. If you cannot stay, please take it with you. Thank you
Very good clay.
So, oh, thank you
That's why
very
you love
much.
what you
I
do.
love to see you. Lucas, you know, I'm downstairs. So any question, please call me, stop by. I can help you with everything. Thank you, thank you, whoever is on Zoom.
Thank you over here.
Thank you for that mug also, Lisa said you had. So, yeah, so
Aw.
hopefully we'll be doing some good things together. I'm so happy to be back in Florida.
And
I have no idea.
I found out that the mug won't fit
Oh,
in the cup
how
holder
exciting.
of my car.
Oh,
How excited are you
Oh,
to be
so
so?
I am.
It's a 2004.
Oh,
So it's an
You're welcome to
older.
join us.
it's an
oh, so
older,
it's smaller than
it's-
that?
Yeah, it's smaller. So he just
That's
says,
really pretty.
Oh,
I
okay.
said, I'm gonna bring my mug to me today. And he
Oh,
said,
okay. I'm not.
check what it will fit in your cup holder.
Oh.
I don't understand. Yeah, well,
Oh, okay.
I didn't have number
You know what I love
Yeah,
about
so we're going for
He
Annalise's
keeps the
birthday
water
at the Cannon
cold
Gardens.
Yeah.
for a very
Oh,
long
okay.
time.
That's the same as live here for a long time,
Thanks.
you know?
Yeah, I gotta do a crap
Yeah,
load
because
of
some of
crap.
them,
Yeah,
Yeah,
that's,
yeah, that's
yeah,
nice.
he
they
picks
don't
up
go.
the, yeah, but,
That is nice.
but he gets.
Thank you so very much. Thank you.
Sure.
Absolutely.
As far as the 2-week vacation for self-employed, like if you personal, I'm also in May because of COVID. Started as a real estate agent in June. And actually, So I mean, it has to be income coming in because of, so you go from job and then unemployment and then I go right into this job, but I still need 2 years.
Oh,
Okay, your
I
previous
guess I was
job,
here.
it was W-2 or 1099?
It was 299.
Okay, so no, you won't need it because.
I think you mean a regular, like it was.
I'm
it was
going
like
to.
a new home builder, and so I paid taxes and, yeah.
But they sent you a 1099 statement or they give you a 1099?
No, it's a W-2, I'm sorry.
So yeah, we have to wait the 2 years because when you change, and this is something and I didn't mention, right? When you go from 1099 to W-2, if you change jobs and you go from 1099 to W-2, you just need a month
Okay,
of pay.
okay.
I had a case a long time ago, and this is something, guys, if you want to hear, with employment history, she's asking if you go from W-2 to 1099 or vice versa. If you go from W-2 to 1099, we have to wait the 2 years period. If you go from 1099 to W-2, all we need is a month of pay stubs.
Okay.
Because W-2 is more secure, let's say it that way.
Right.
Because you cannot write off anything at the end of the year. It is
Okay.
what it is.
Okay.
I had a case like about a year ago. They were moving from,
I have to go in with doing it right now, thanks.
so they were moving from another state, and all we had, it was the offer letter from the employer here in Florida. And we used that and we were fine. We closed the deal because they were moving to Florida.
Fine.
And they have to prove they are gonna have a job in Florida because they will be able to pay that mortgage. That's what we're looking for.
Yeah, that makes sense, that makes sense.
Yeah,
Thank
so
you. I
the,
appreciate it.
absolutely.
Yeah.
So the offer letter was enough.
Oh, okay.
Yeah.
Perfect.
But yeah, thank you for the question
Yeah,
because
no, I was
that's a
just
very,
curious,
very
yeah.
important question. Yeah.
I appreciate
Mhm.
it.
Thank you.
I had one quick one.
Yes. Yes, yes,
I
we
didn't know
still
if
do that.
they were doing that.
The 203K, we have to be very careful, especially, yeah, it's an FHA.
Yeah.
And especially now because, we need to approve, I mean, if your client is pre-approved for 250, that has to include
Includes the,
the
repair.
the research and everything. And they, sometimes people think we are sending a check to the borrower. No,
No.
we have to have, all the bids and everything, and it has to be an approval, GC or general contractor, and everything has to be approved under FHA.
And they started with a, 6 months, from the time of closing to the time of job completion, I think it was 6 months requirement.
Yes, 6 months,
And then
yes.
also, was it still that they, get up to 6 months of rent or whatever is rolled into that? It seems like there was something about this.
I will need to ask about it because
Yeah,
that program, believe it or not, is
or
not,
whatever their other mortgage was.
Yeah.
This is remote.
it's not that common right now because the seller is
Hey, how are you?
not waiting. The seller doesn't want to wait until that.
Oh, no,
Yeah.
yeah, they don't have to though, to close, right?
Works
They have
great.
to- Repairs don't have to be done until
Yes.
6 months
Mhm.
after closing. So that
Correct.
doesn't really hold. the
Doesn't-
seller up.
It hold it up a little bit because the whole
I'm probably-
process of,
I'm
the
probably gonna come in
bids for
because,
GC and blah, blah, blah.
I
So
close
it
my
can take
house
up
on
to 6
hopefully,
days
fingers
to
crossed,
close that.
Friday.
So that's
Uh-huh.
only good. Something-
Maybe worst
So
case,
yeah,
Monday or
so
Tuesday.
normally you will see
Then I
it
have to
on
come
your
in and do the
seller
finance.
side, they are not gonna wait for you 60 days to close a deal. So when they
Especially
have,
right now. they don't have to.
especially right now,
Yeah.
and when their house is not in optimal conditions, they prefer to go conventional
Sure.
and cash only. they don't even deal with
They
it.
wanna do
They don't want to deal with
yeah,
FHA
yeah,
because they
yeah.
know, yeah.
Right.
And you as an agent probably, and this is something you tell me, you probably don't want to hold yourself.
Oh, no, none of
Yeah.
us want to
So
do
you're
that.
probably are not gonna advise to your seller,
Right,
hey.
but when
we
they
can go-"
ask,
Okay,
when the buyer
Yeah.
asks
Mhm.
about it.
Bye-bye.
Yeah,
refer
but
them
it's the
right to
same
you.
thing for, when clients ask me, and that was something I didn't mention, but when clients, borrowers ask me about, houses in foreclosure or show.
Yeah.
You can buy a house with FHA or conventional, but I don't think you're gonna win that.
No, it's not a good thing. I went through that.
That offer, I don't think,
I went
you
through the
know.
whole short sale thing, trying to buy a short sale and I ended up not getting it
no.
after 6 months.
No, and you know, if the seller has a cash offer, they are not gonna go with an FHA. So yes, you can buy it, but go out and win
Yeah.
That's the point, so yeah.
So if you were to meet with somebody here, would that be, you would ideally set that up during the hours of your here?
Yes, call me because right now, especially now, that probably, I'm trying to finish all my, not finish, but not pushing too much business in Sarasota area, but I do have a lot of business right now. And I wanted, take care and,
Sure.
so I have to go to Sarasota more often than I would like to.
Now, are you here in Englewood?
I live in Port Charlotte.
Oh, you live in
Oh,
Port
but
Charlotte?
yeah, I'm
Okay.
permanently, yes. I'm your loan officer. I'll be here. Eventually, I'm gonna be here Monday to Thursday. And probably going to Sarasota only on Fridays to take care of my business there. But right now I have too much going on in Sarasota, so I want to take care of that. And because I deal with a lot of Latin people, I think I said it yesterday in the meeting. I had, I think it was on Tuesday, I got around to Sarasota because I'm closing a deal tomorrow and the lady doesn't drive.
Oh, goodness.
And we need her to sign the CD. And she
Yeah.
was like, no, I don't know how to do it. I'm not gonna do it. And so, no, wait for me. I'm gonna meet you. So I run, just to help my client because I don't want to delay the closing.
Sure.
So those cases I do have sometimes with Latin people. Most of the time I ask help from the realtor, but if the realtor cannot do it, I will definitely, So, but eventually I'll be here Monday to Thursday. So just give me a call if I am in the area and it's a Tuesday, which is the day I won't be here now. I mean, I can stop by and see your client and then go to Sarasota or whatever, so I can put it in my schedule.
Good to know.
Thank
you again so much. Appreciate
no,
you.
Thank
Take
you,
good care.
thank you.
Thank you for lunch.
Oh, absolutely.
Yeah,
My
thank you very
pleasure.
Class. I got a
Great.
lot out of this class.
Oh, excellent. Oh, thank you. I'm glad. That's the purpose. No, and I think it's important for you to understand at least basic things. And I think I didn't say, conventional loan seller concession is up to 3%.
Mm.
Yeah.
Mm.
But that seller concession cannot be used for down payment.
Okay, that's good to know.
Only for closing costs. Conventional lets you use that seller concession to pay liabilities, to pay debts.
Oh.
If it's, let's say, 3% is not that much, but
It's money.
it's money, and if you can use it to pay off some credit cards, isn't it great?
Right.